From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB on the 22nd of July. I'm Nadine Blaney, and really pleased to welcome to the program as well Josh Gilbert from eToro. Josh, hi, good afternoon to you. I suppose we woke up this morning knowing what one of the very key talking points of not just today, but for the next few months is going to be. No more President Biden after this November election.
Yeah, hi Nadine. Happy Monday. Good to be here. No, exactly that. Started off a Monday with something to talk about, which is always good, I guess. Gives us something to sort of chat about. But yeah, I think that's the sort of the main talking point for the week. Probably comes at a time when I think a lot of people maybe expected it to come a little bit sooner. Obviously, I don't think people expected that to sort of happen straight after what we saw with Trump. Just obviously the weekend before last. So maybe comes at the right time for the Democrats, but I guess that's yet to be seen.
Safe to say though, Josh, like when you look at Asian markets, we've got US futures, they've been trading higher throughout the day today, that perhaps the chances of Biden stepping down was already priced in. Like, yes, it inserts this uncertainty, potential volatility to come, because it's now a little bit less certain, I guess, that Trump is the heir incumbent. However, it's not like we've seen any sort of blow up when it comes to the trade today across the Asian region.
Yeah, no, I think you're right. I think it kind of was that expected move. I think markets had sort of begun to sort of price in that we were going to see that. But I also think if we look back to sort of last week as well, we'd basically seen the expectation of a Trump win sort of again heavily being priced into markets. That sort of Trump trade really sort of come into fruition as well. Again, him stepping down does sort of create that uncertainty in the sense of obviously we don't really know who is obviously going to sort of be the runner. But I guess his endorsement of Kamala Harris is probably the big one there. But it does create a little bit of uncertainty in some sense. I think we have seen markets maybe take that into their stride a little bit today. But ultimately, I think markets are continuing to sort of price in a Trump win. Again, we've still got a long way to go. Anything can happen within the next 3 months, and that's a long time in a presidential campaign. But I think broadly, Trump is good for stocks. We've seen that in the past, and I think he's broadly good for tech as well. And I think we'll probably see that in the US overnight tonight as well.
Yeah, and we'll be watching Bitcoin, of course. That was that knee-jerk reaction. Because that's sort of a Trump trade, so to speak. We've seen a bit of an easing in the US dollar as well. But let me bring up on screen how the local market looks to be finishing. The CBO Australia index down by about 0.6, actually 0.5% now. So a little bit of buying into the close there. And the S&P ASX 200 is down by about 0.6% as well. So they've sort of moved lockstep. Josh, should we be upset that we're below that 8,000 level for the local market?
I don't think so. I think we have a lot to thank the US for at the best of times here in Oz, especially when it comes to our local market. But I think we have them to not thank today for obviously that weakness we're seeing today. Again, coming under obviously pressure again, probably today as well. We're probably seeing a bit of a knee-jerk reaction as well, I think, to that Biden move also. So again, we've got that sort of selling pressure from the US that we had last week coming into sort of fruition. Plus, we also have, as I say, had that Biden news coming through. But I think broadly, it's been a pretty negative session. And I think we've got to be positive on markets from what we've seen so far in the 6 months, leading up to sort of now. We've had a great start to the year from the S&P 500. Tech's obviously had a great run, and we are starting to obviously see that rotation from the leaders of the year, the winners, into sort of those laggards, those sort of unloved sectors. And I think it might take a bit of time to obviously for that to sort of really come to fruition here locally. But obviously when that does happen, that will be obviously fantastic news for our market when it does, really sort of stand out. Again, we are sort of getting the tailwind of that from the US. But again, we've got to remember that we do have an RBA that is still pretty hawkish on this sense. And, we still have a hike on the table. So I don't think we're getting local investors too excited about those sort of rate sensitive sectors just yet.
All right. Trump versus Harris is one of our key themes. I think that should have a question mark on the end. Also, we saw some unexpected stimulus coming from China. I mean, many people have been talking about stimulus to come, but it wasn't expected to happen today. Many analysts had thought that China's PBOC might wait until we saw a cut coming from the US Fed, which of course the market expects now in September. So that stimulus in terms of the cutting of that reverse repo rate, as well as those loan prime rates coming earlier than expected. And I had a good chat with a guest earlier on, Gary Eaton from Nextaxis. I find that so hard to say, Nextaxis, who indicated that it's unusual for the PBOC to just do one cut and done. So there could be more coming down the traps. And then you just heard Josh Gilbert, my guest host from eToro, alluding to top tech. And of course, we get some of those results later this week. I'll chat with Josh about that in just a moment. Let me just swing you through some of these key sectors to see how they performed. And what we're seeing here is a reflection of the commodities complex being sold off last week. And of course, some specific news with South 32. I'll get there in just a moment. So if you look at our tech sector, actually in some regards outperforming. If you look at WiseTech Global, just coming in line with the market, although some of those other quality companies like Technology One trading lower. And then the banks, such a focal point. I had a good conversation with Wim Steamers from AL Capital earlier today. That's up online, ausbiz.com.au, if you'd like to take a listen. He told me they're very they know it's a widowmaker trade, but they remain very cautious on the banks. So, but let's put a positive spin on that. Wim gave me 3 companies, so 3 stocks that they think will have enormous, and that's a quote, outperformance in the couple years to come. So go seek that out online. Don't forget, if you miss anything, they're there for your perusal at your convenience. Let me, before I get back to Josh, just get you through some of these top corporate stories. And Woodside Energy wants to become one of the world's largest independent producers of LNG, agreeing to acquire all of Tellurian for a total value of $1.2 billion. Moody's says that Woodside's got an excellent liquidity profile and that it's more than adequate to cover the cash outflow for the transaction. At the same time, it says Woodside's capital spending and execution risk remain elevated. Again, great interview with Clyde Russell from Thomson Reuters, who really walks us through what this could potentially mean from Woodside, also the pitfalls, and also gives a view on Meg O'Neill. That's up online shortly. And South 32 said it released its 4th quarter result, provided an update on FY25 production guidance across most of its assets, pre-released various elements to impact the FY24 results, including an impairment of $554 million for Worsley with the FY24 results coming up. That's the alumina. You can see there Insignia Financial positive business update, returning to positive new inflows, new operating model, executive appointments. It says will drive improved accountability, risk management, efficiency, and focus on profitable growth. So up by 5.6%, and good old Iris providing guidance with adjusted earning up around 50% on the very soft previous half in 23. It expects adjusted earnings in the first half of 24 to come in between $65 and $67 million. The material uplift comes as Iris enters the final stages of its transformation program. It was stock of the day. We spoke with Sean Hickman from Market Matters and David Lane from Ord Minnett.
The result was very good, and the reaction this morning, I haven't seen the last half an hour, but the reaction this morning was very positive. I think I can see the stock going up towards $10. I'd call it a cautious buy, but it's not a stock we watch very closely. We're just keeping a close eye on it at the moment. It could be a recovery play, but it's not got our money. It's not on our buy list. I'd call it a cautious buy, or right here, right now, I'd probably call it neutral.
As you said, it's a company that's suffered a lot over the last couple of years, and I think what today's announcement and even their announcement earlier in May sort of confirms is that they're now getting back to their knitting. They're selling their core Iris screens, which we use on a daily basis. X-Plan is another product that they have, and that has about 60% of the market share in financial planning world to produce statements of advice, etc. They're really concentrating back on that business, which is the core of their business.
So that was a specky buy from Market Matters, and for David Lane from Ord Minnett, a buy. And you can find all our stock of the days online up under series. Josh Gilbert from eToro is my guest host today. Josh, I suppose if we're thinking about the likes of South 32, the pressure that came through on the miners today, it goes back to commodity prices. I mean, those were very steep falls in the prices of some of the key commodities last week.
Yeah, big slump last week. Some of the worst slumps that we've seen in a couple of years. And again, I think a lot of that's stemming from China. We're starting to see, copper inventories build up as well. That certainly sort of sounded the alarm. Also, good news, obviously, today coming from China with obviously that rate cut, as you sort of alluded to. But yeah, the material sector locally has obviously been under a fair bit of pressure. We spoke last week about Rio. We spoke about sort of BHP. They had their numbers sort of coming through. Both major stocks on the index down, more than about 10% this year. Those South 32 numbers today, again, what we sort of saw, I think, slightly different there today was that their production numbers were maybe slightly weaker. The market, clearly focusing on that impairment charge. That was sort of the big news and why we saw the stock fall so heavily. But again, their production numbers were a little bit weaker. And I think a big focus here is coming on production, because ultimately when we've got these metals, and these commodity prices that are weaker, they've got to make up for that with production numbers. So a weaker than expected production number isn't good, and that sort of tied in with that impairment has obviously sent the stock a lot lower. But yeah, we might see a little bit of positivity now coming through. I think I mentioned it last week, but we're starting to see, a few contrarian sort of views there from investors looking at sort of buying some of these names, given how heavily they have sold off. And if we are starting to see, more support measures from China, I think that's going to be positive.
Mm-hmm. Yeah, I was surprised that maybe we didn't see a little bit more positivity creeping into the materials space today, given that news from China. Just an aside, do uranium, when we talk about most traded, say, on the eToro platform, is there a lot of interest in uranium?
Yeah, look, we definitely do see that. I think obviously that was at the start of the year when we had that sort of uranium move. We've also, always seen a big interest in the material sector more broadly, and we tend to sort of see whatever commodity is sort of moving. So with that uranium price moving at the start of the year, that's where we did see investors sort of move to. With iron ore prices being a little bit weaker, we have seen again investors sort of move away from those sort of bigger miners, maybe moving into, sort of those uranium miners, alumina miners as well. So again, I think it's really heavily focused on where those commodity prices are going, which makes a lot of sense. Again, if we're seeing lithium prices move higher, they'll be in lithium because, that's the anticipation that those companies are going to make more money given that those commodity prices are higher.
Got it. All right. Let's just look past what's going on here locally, because it gets interesting, or more interesting, I should say, when it comes to U.S. quarterlies this week, doesn't it, Josh?
Yeah, big week, huge week in the US for quarterlies. Really steps up a little bit. Again, we had Netflix was the sort of the big name from last week that sort of came through. They impressed, better than expected earnings. Ad-supported memberships were up, really sort of coming through and driving revenues, which is what they want to focus on. They're going to take away those membership numbers, those quarterly numbers from next year as well, but almost double those memberships in the quarter, which is obviously helping to drive the business. Sports is a massive part of that. They're driving more sports to the platform, which is driving more advertisers as well. So Netflix have sort of really set the tone there. But yeah, this week we have two of the Magnificent Seven. We've got Tesla and we've got Alphabet. I think these results will obviously give us some insights into AI across both those names. It's going to give us a great look into sort of the digital advertising spend, particularly there with Alphabet. And of course, we're going to be seeing a look into sort of EV demand. Tesla is going to be the name that I think takes the headlines. Really, last 6 results, we've seen a 10% or so move from the stock after results. So we're going to certainly see some expectations. But also, we've got to remember that they fell short in Q1. Musk delivered a little bit of magic after the call, sort of gave us a little bit of a clearer view of what to expect from Tesla over the next sort of couple of years. He sort of handed us that cheaper model that we had expected and that Wall Street had wanted for a long time. But then we obviously had those Q1 delivery numbers as well, and that's given the stock a lot of optimism. Shares are up about 70% in the last 3 months. So what that tells me is we've got a lot of good news priced in, which leaves little margin for error when we come into those results. And given that they haven't delivered much, excuse the pun there, they do need to sort of turn up. So AI going to be massively in focus. That will be front and center. Also, Musk as well is probably going to be questioned on his support of Trump, because as we know, Trump is someone that hasn't been a big backer of renewables in the past, and see, if we think about electric vehicles, that's all that is. Their whole business is built on sort of renewable storage and energy, so that will be really important, because I'm sure he'll be questioned on that. Cybertruck production. And obviously, guidance will be a focal point. And then with Alphabet, as I mentioned, advertising is going to be that key focal point. That's where they make the bulk of their revenue. But the market is tended to sort of narrow in on that cloud growth. That's the AI focus. That's where everyone looks. But they're coming off the back of a great Q1 earnings, announced their first ever dividend, $70 billion buyback. So, Alphabet are absolutely flying at the moment. Probably going to hear more there from their acquisition of Wiz. That's going to be the biggest acquisition in history as well. They are spending quite a lot of money at the moment, so I think free cash flow will be a focus. They do have an other bets category on their quarterly results, which basically is their investments into sort of startup businesses, and then they're spending a fair whack there at the moment. So that may dent cash flow just for the time being, but I think importantly, it's just going to be AI and that cloud growth, and that will give us a nice idea and a nice lead into what we can expect from Nvidia and sort of some of those other names. But yeah, I think Alphabet is going to be one that is probably going to lead the Magnificent Seven alongside Nvidia for earnings growth this quarter. So definitely a name to watch.
Okay, interesting. Just an aside. Are you a fan of the Cybertruck? Like, I'm trying to figure out if this is a girl-boy thing, because I just think it's ridiculous looking anyways, or are you one of those that thinks it's just, a dream come true?
I can't exactly say I would be rushing out to buy it. I don't think it's the most beautiful looking vehicle ever, but look, Americans are sort of built a little bit differently, I think, aren't they? They love those sort of, powerful engines, even though this isn't going to be powerful, but those sort of big looking trucks in that sense. So I think if Tesla can give those Americans those big trucks that they like, then I think, the market might like it as well.
Ugh, looks like it was driven, or drawn, I should say, by like a 5-year-old. But anyways, I digress, and I'll probably get a bit of hate mail off the back of that, but there you go. All right, Josh, do you mind just sticking around for a minute? I'll just quickly run us through what moved the markets today. Market leaders being what we've already discussed. So Iris and Insignia Financial looking really good. Fletcher Building is making up some lost ground, though. eToro Australia, I'll give you a plug. It was one of the most traded last week. It was the top loser, I should say, last week, down by about 25%. Quite a lot of ground to make up. The laggards today in the big end of town, South 32, Whitehaven Coal, on a couple of brokers downgrading the company. Just going by memory, Citi was one of them. Let's get to the small and mid-cap space. In the small end, Titomic up by 15%, Dropsuite up by close to 9%. Those on the lagging side, though, looking largely at those in the resources space. Actually, I think they're all in the resources space. So there was the day on a platter for you. Tonight, Josh, safe to say, there's not a lot of economic data tonight. Does get more interesting a little bit later in the week, but we've got the FOMC speakers now in a blackout period, correct? So I guess politics might, dominate over economics, at least in the short term. Oops, I think we might have lost. Oh, Josh, just was saying that Fed speakers, if we can start again, they're in a blackout period. So at least until it gets more interesting on the economic front, we might really be focusing on politics, you think?
Yeah, look, I think so. I think the politics will certainly take front of mind for investors this week, given that we are sort of pretty light on that sense. We do have US PCE towards the end of the week, which I think will be pretty interesting, although we are basically nailed on, I think, at this point, aren't we, for a cut in September, unless we do get anything sort of dramatic coming through in, PCE, which is obviously the Fed's preferred gauge of inflation on Friday. But look, I think the data so far has shown us that we are actually getting inflation that is easing. It's moving in the right direction, and I think the Fed can be happy with that, and it will give them room to sort of cut. So that will probably be the sort of the macro, I think, takeaway for the week. But yeah, politics will ultimately probably drive stock markets this week, and it will come back to that Trump trade. It'll come back to, you know, do we see the US dollar sell off? You know, we've seen that sort of already starting to come through. Gold was, you know, broadly a little bit higher this morning as well. So I think that will dominate proceedings to sort of start this week. And of course, we can't forget about how big earnings are when we have those huge names coming to market, Alphabet and Tesla. They certainly have the ability to sort of move the market, given that they are sort of the early reporters, and that can affect the sector. We saw that last week with ASML and TSMC. You know, ASML reported results. They were actually broadly not too bad. And then obviously we had this idea from Trump as well about sort of those restrictions and what that may mean, and that affected that whole sort of semiconductor sector as well. So, you know, even just two names reporting, they do have the ability to sort of shake the entire market. So that's definitely something to watch.
Got it. Look, tomorrow it's not extremely exciting here, if you don't mind me saying, but we do get quarterlies actually coming from Woodside, so we might get a little bit more commentary on that U.S. Gulf of Mexico buy. Also, we get the weekly consumer confidence index coming from ANZ. So looking forward to that. Josh Gilbert from eToro, very much appreciate your insights throughout this episode of the COB. Look forward to speaking. Perhaps maybe we can catch up in the wake of some of those big US earnings as well.
Sounds good to me, Nadine. Have a great week.
You too. That's Josh Gilbert from eToro. And that is the show for today. So just to reiterate, I know many of you like me to do so verbally when it comes to the S&P ASX 200, the benchmark index closing 0.5% lower, 7,931. Could have been worse. One stage today, we were down by 0.75%, but you know, some big moves happening in terms of monetary policy in China, also with the US President Joe Biden saying he will not be contesting the next election. So eyes on Trump trade tonight, and we'll run you through everything that comes to fruition when we're live from 9:45 a.m. Tuesday tomorrow. We'll see you then.